We are a little bit different. We're more upstream weighted than some of our companies, so more oil and gas production weighted relative to downstream and chemicals. That's a differentiator. The geography is a little bit different than some of our competitors, both in the downstream and in where we've chosen to invest. We're underweighted, for example, in Russia and the Middle East relative to some of our competitors. We've had to make some choices based on the investment returns that we see. For example, we've chosen up to now not to be a part of southern Iraq, even though we had done a lot of work to try to be prepared to participate, but we didn't see the economic returns.
It seemed when oil was at $100 that the independents had the best business model. We're living in a different time and a different place now, only several months later. Was big oil built for price environments like this?
I've been in the industry for 35 years, and we've seen the price drop 5 times, 50% or more. So we've been there before. And economic conditions can change, costs can change. And so you have to have a portfolio of opportunities with different fiscal terms, different risks associated with them, political, geographic, and other risks that we encounter. And so you have to have options because you know the pace of projects won't always be exactly what you expect. But we have to have that balance in our portfolio, and we have the advantage to be able to do that. So perhaps we have a little different view of the business as opposed to just the short-term view of the U.S. business, which has been a blessing for this country, but it's not the only thing that's going to be needed to bring energy to the world population.
Elaborate on that last point.
Well, the shale business in the United States, the shale and tight rock development that we've seen, has been tremendous for this country. And the independents that largely fueled that growth have accomplished great things. But if you look at the shale and tight production of oil, it's about 4 or 5 million barrels a day. The world market for oil and liquids is 93 million barrels a day. It's interesting, after the success in the United States, the expectation was that this will happen everywhere. It hasn't worked out that way. There actually have been fewer places where the shale, the rocks have worked, and where the economic system is in place. The world is going to need lots of energy. It's going to need shale production, but it's also going to need deep water, LNG, and other forms of oil and gas in order to be able to meet the needs that are out there in the marketplace.